I think the market wants to go higher because of an old saying, "Don't fight the Fed," and they have something quantitative easing infinity and beyond. So they are throwing everything they can at this, and that is the huge prop. And of course, we have the stimulus out there as well, and we saw that even in 2008 and 9 when they had a big stimulus package. It didn't take forever for the stock market to start to rebound. So I do think that the economic situation will not recover as fast because it's like a broken leg, and it takes time to heal, and then you have to, get rid of the atrophy and all of that. And folks going back to work, that's exactly what they're doing. They're not really sure, what they're doing back at work yet. So we see that is overlaying the economy, but the market wants to rise, and if you get in its way, you're going to be in some trouble. The one thing I would say, though, this is a strange advance. If you look at the 5 largest companies in the S&P 500, on average, they're up over, I think, 10%. The 495 remaining, they're down more than 10%. So a weird type of environment where retailers or retail investors are really moving into the market. And just as an example of this speculation, I have a young friend who got his stimulus check, the $1,000, and he says he's now turned it into $6,000, and he's never traded a stock before in his life. So I think that's a little bit of too much froth.
If that's not a sign of the times, I don't know what is, Barry. But so taking those two things together, then you're talking about, one, the concentration of this market rally and the big 5, let's say the big tech names we follow quite often, and 2, the concentration of retail investors that have been pouring in. Do you need to see more institutional money chase this rally to be convinced of its upward momentum?
I do. As we talk about, say, fighting a battle, right now it's just the generals out there on the battlefield, and if they don't get the privates and the corporals out there joining them, this battle will end in a bad manner. So we do need to see that. We do need to see, the confidence. Everybody, I think, on the institutional side, our firm included, is cautious. Doesn't want to take chances with our clients' money that there'll be a second wave of this virus that shuts things down again. So I do think that once we really have a feeling that we are going to be on the upturn, the institutional folks will come back in, and I think that'll be good for a whole nother area of the market.